Hello everyone, my name is Kyle Payne and thank you so much for joining me on today's live webinar presentation, how you can minimize your business bottom line through using some very unique saving techniques that we're going to outline in today's presentation, brought to you by Stellar Impact Foundation. Now, we have a very full house on this live webinar, so I'm going to go ahead and just jump right into our material that we put together for you, starting with our agenda. And we're going to start with just a quick introduction to Stellar Impact Foundation and how this all came about, this presentation. Then we're going to jump right into the 3 areas of savings that your business could potentially be leaving money on the table and how you can go about getting that money back. And then lastly, for those of you interested in exploring what your specific number is of what savings you could potentially be getting, maximizing all the potential options out there, we're going to give you some step-by-step things that you can do to get to that point. And best of all, you're going to be able to do that without any money out of your pocket, because we only win financially when you win even bigger financially. We're going to talk more about that later on in this presentation. So with that being said, let's just get right into who Stellar Impact Foundation is, which is a nonprofit organization whose purpose and mission is to work with other nonprofit organizations to help them build self-sustaining strategies through offering value-added business services to the businesses and individuals that they serve in and around their community. So their whole purpose, their whole goal is to help another nonprofit become self-sustaining financially, so the money that they generate from donors doesn't go to just keep the lights on, but rather goes to help them expand their ability to serve their purpose that they're there for in the first place. And so I introduced to Stellar Impact Foundation another organization called Stryde, and introduced this organization to them because what Stryde does is they work with small and medium-sized businesses, and they provide consulting level services on incentives and saving techniques that go well beyond your typical CPA firm to help businesses maximize the kind of savings that major corporations get when they hire a Deloitte & Touche and Ernst & Young. And best part of all this is that Stryde works with your existing relationships, including your CPA firm. They're there to complement what they're doing and provide access to resources that otherwise would not be available to this small and medium-sized business. So Stellar Impact immediately saw the impact of this and decided to sponsor one of these live webinars, the one you're watching right now. And so you should know too, one of the benefits that should you as a business owner decide to work with our organization Stryde to realize savings, and if you do in fact realize those savings, a small portion of that will go towards Stellar Impact Foundation, help them support their organization that comes out of Stryde's fees that they generate. Now, I mentioned fees, so I want to mention to you right here and now that we don't charge any upfront costs for the services we provide. Instead, we charge a portion of the savings that we generate from you to cover our expenses and cap that. So even if our expenses go above and beyond what they normally be, you're not out of any money unless we do a better job and get you more savings. So it's a very unique proposition that makes it plausible for a small and medium-sized business to get a Deloitte & Touche or Ernst & Young level consultation and the results from it at a fraction of the cost. So with that being said, let's get into though, what are the 3 areas of savings that we really work with small and medium-sized businesses on. The first one that we look at is tax incentives. And we'll talk more about this in a second, but these are incentives that go far and beyond what your typical CPA firm can provide to you. The second area we're going to talk about is expense reductions. How can we get your bills to come down without you having to actually change vendors, right? And the third area is retirement plans. Now, this might seem as a surprise, but there's actually some unique strategies out there that rarely are deployed that maximizes tax deductions for business owners and allows your money to work better for you that we're going to talk about later in this presentation. But first, let's talk about the tax incentives. And what are the tax incentives we're going to be talking about that go beyond your typical CPA firm and their ability to maximize these tax incentives? One of them is cost segregation, property taxes, and research and development. Now, these are 3 of the major ones that we look at, but we do look at other ones as well. But these are the ones I want to focus our time on today. And what I want to show you on this screen that just popped up is averages of tax incentives that companies by industry have seen from working with Stryde. Now you can see on the screen that there's some pretty big numbers on there. In fact, the smallest number on there is $80,000 for the industry of the auto dealerships, but a lot of other industries are experiencing much higher savings. Now, these are not the only industries we work with, so if you don't find your industry on there, don't despair. These are just some of the common things we end up working with and see some significant savings with. And the good news is that I'm going to venture to bet all the companies that we worked with have a CPA, and most of the time we actually work directly with that CPA. So these are incentives that go above and beyond what they had been getting in previous years. And this again speaks to the fact that some of these tax incentives require a certain level of expertise that you typically only see again with those Deloitte, Touche, and Ernst & Young CPA firms. But because most small and medium-sized businesses can't afford to work with them to get a positive ROI, they end up missing out or minimizing these incentives. So let's take a look at each one of these one by one, starting with cost segregation. And the question is, what is it, right? Maybe you've heard of this before, and maybe you haven't. Well, I'm going to give you a very basic definition of it. It's not going to be overly analytical, but it's basically an engineering-based study that permits commercial real estate owners to reclassify real property for depreciation purposes. So let's break that down. The first thing I want you to notice is that first couple of words, engineering-based study. Notice it did not say accounting-based study. This is not an exercise in 2 + 2 = 4. This is engineering. It's an engineering-based study that allows the whole reclassification of your property in order to allow you to accelerate the depreciation to maximize your tax deduction. Okay, so this is going to require a certain level of expertise we're going to talk about in a second. But before we do that, let's just see about what you can expect for qualifying before you'd even know if this is of interest to you. So any commercial property built or purchased within the last 20 years with a cost of $500,000 or more, so if it costs you more than $500,000 to build it or to purchase it, and did this in the last 20 years, then you might be in a position to benefit from this cost segregation tax incentive. Or if you haven't purchased or built it in the last 20 years, but you've done renovations or improvements within the last 20 years, they're equal to or greater than $250,000, you also might qualify. Now, the only other thing that you need to have to qualify is you have to pay federal taxes within the last 3 years or plan to in this current year. That's going to be pretty much across the board for any tax incentives. So those are the types of qualifications. So if you currently own a commercial property, chances are you probably paid more than $500,000 for it. And if you don't own a commercial property, this is another reason why you want to talk to your banker or work with us, which you'll find out in some of our other services, to get your building owned, because you're going to have a huge tax incentive, far more than just the basic tax incentives that you get from owning, like, say, a personal property. The other thing I want to talk about is the expertise needed for this. And I want to emphasize it's not just accounting, it's engineering and accounting expertise to maximize this benefit. This is why many CPA firms acknowledge the fact that they don't have the engineering background to do this properly, so they don't do cost segregation. Some of them do, and a lot of them don't. And the reality is that this requires an equal level of expertise in both areas, not just an accountant who can do thinks that they can do engineering and maximize your benefit. There's a good chance you might be leaving money on the table. So that's the expertise needed for this. Well, what about then the next one, property taxes, right? This should be pretty straightforward. But the first thing that comes to mind is, can I even fight the government on this, right? I mean, they've kind of set the rules. And the answer, of course, is yes. But the real question to be asking is, how do you do this? Because doing it the right way will make or break whether or not you're successful in this. But before we get to that, let's talk about realistic payoff. Because is this even worth pursuing? And the chances are probably yes. Because if you own your own property, you can potentially save up to 10 to 25% or even more in your real estate property taxes as well as personal property taxes that you paid. That could be a significant worthwhile chunk of change. And you qualify only in the minimum qualifications really to see if this is of interest is that if you have $50,000 or more in annual real and personal property tax together, so a combination of the two, then you're in a position where you can definitely qualify for some significant worthwhile property tax reductions that put money back in your pocket. And the expertise needed, once again, is more than just accounting, because there's more things in play than just adding 2 + 2 = 4. So extensive market experience and valuation. So this is being able to evaluate your property correctly tax and law in order to perform the property tax mitigation process. So this requires two areas of expertise that typically an accounting firm isn't going to have in-house unless, again, of course, it's a Deloitte and Touche or Ernst & Young, and you're going to be paying through the nose for that if that's the case, if you go that route. But not with how Stryde has built this partnership with your local CPA. We can add in the areas of expertise that they need and get you the maximum tax deduction on your property taxes. The third area we're going to talk about is research and development. This can be huge for the right type of business in particular, but it's something that a lot of people don't even think about because they say to themselves, well, I don't develop any prototypes and I'm not a defense contractor, so I can't qualify, right? And the question is, absolutely, you definitely could qualify even if you don't develop prototypes and if you're not a defense contractor. Times have changed dramatically with the research and development tax credit. In fact, I want to share with you some examples that you might be surprised to hear qualify as a tax deduction under the R&D tax credit. So first one, developing and or improving quality and cost-efficient solutions and processes. What business that builds anything or makes anything tangible or software or whatever is not doing that first one? And all the time, energy, and money put towards that, including salaries of people, will qualify. The next one, quality assurance and testing. So any company that has any kind of like ISO 9000 type of certification or anything similar to that, that will go towards this tax credit. The next one is process improvement resulting in better productivity and turnaround cycle. I like to give the general example of you realign your workspace in order to improve productivity. That could be considered qualifying for the R&D tax credit. Who isn't working on process improvement to improve productivity and turnaround cycle, right? The next one, specialized assembly process using technology. If you use any kind of technology to improve the efficiency of your assembly processes, that also will qualify. Next one is developing tooling applications and solutions. If you develop any kind of tooling application solutions, this is something you need to look at. And the last one I want to talk about is product development and improvement. So notice this is not just product development. It says product development and improvement. You can take someone else's product and make an enhancement, and the energy, time, and money that you spent to improve that product that was someone else's product can qualify for this R&D tax credit. So my point in this is that, and these are just some of the examples, there are a lot of examples of things that qualify that go well beyond the traditional thought of prototypes and defense contractor building products from ground up, original solutions. So taking this one step further, what about qualifying? Well, any business that has an annual payroll of $1.5 million or more, so your total payroll of $1.5 million or more, and have paid federal tax within the last 3 years or plans in the current year, is a definite candidate for this research and development tax credit. And then it comes back again, once again, to the expertise needed. This is very, very intensive tax credit if you're going to maximize it. There's also tax credit that people can take the short way out and do the bare minimum, leave a lot of money on the table, but do it themselves. So we recommend people not leaving money on the table because this can be literally in six-figure savings for a business, and it requires IP attorneys with engineering backgrounds that can adhere to the comprehensive project-by-project approach methodology as required by the IRS. This is labor-intensive. This requires high level of expertise, which is why most small and medium CPA firms, if they're doing their clients justice, will partner with a company like Stryde to provide those expertise and the labor to do this to help your business succeed in getting the maximum research and development tax credit, because this one could be huge, literally in the six figures. But guess what? It gets better than just tax incentives, because we can also reduce your current expenses, and again, without changing any providers. And that brings us to our expense reduction, our second area that we can help with savings. So this is through audits that get your money back. And I say your money because it's money that you've paid to someone that should never have gone to them. And there's a lot of areas in which we can help get that money back. Some of them right here are credit card merchant services, waste and recycling. Who knew there's money in garbage? Work comp insurance, as well as parcel shipping expense. So shipping things, you can get money back. So let's take a look at each one of these on a more close basis. So credit card merchant audit. So your credit card processing is really a big area of opportunity. And what, though, does this entail? Because it's really a two-phase process. The first phase is that we can correct the processing plan to reflect the most competitive plan type and rate, meaning that, have you ever noticed how every time a credit card processing salesperson comes and says, just give me a bill and I'll prove to you that we can save you money, right? And they prove it to you, maybe that one time you say, okay, go ahead and switch. And then the next month, your old provider comes back and says, hey, let me audit your bill and see if we can win your business back. And let's just say you say, okay, go ahead and do it. Guess what? They probably are going to find a way to save you money. And the reason why is that over time, the way that you process your credit cards and the plan that you're on should adjust to maximize, or minimize in your case, your expenses. And that's one of the things that we help do, is to make sure you're on the most competitive plan type and rate on an ongoing basis to keep those expenses down so you're not overspending without realizing it. The second phase is processing optimization, where we help you qualify payment transactions at lower interchange rates. A lot of people don't realize is that there's not just a rate, there's a lot of rates for different types of transactions. And credit card processing companies get a lot of extra money of your money through not making sure that you're getting the best rate. So what we do is we make sure that going forward that's optimized so you're always getting the lowest possible rate based on the type of transaction is. So that's phase two. And how do we do this? Well, guess what? You keep your provider. We work with them to make the necessary changes, and you don't have to be involved in the day-to-day. We're going to take care of that for you. And the qualifying is really straightforward. If you annually process in excess of $300,000 in card payment volume, so that's debit cards, credit cards, gift cards, doesn't matter. If it's got a Visa, MasterCard, Discover logo, American Express on it, and it exceeds over $300,000 annually as a combined total, then you would be in a great position to qualify for some of these expense reduction services that we provide. And again, all without changing provider. Now, the next one I want to talk about was surprising to me, and that's waste and recycling. And one of the questions that I thought immediately when I heard this is, can I really save money on waste and recycling? Is there money in my garbage? And the answer is absolutely there is. You can save money. In fact, what we found is from our own clients that we worked with, 80% of commercial businesses can benefit and save with a waste audit. 80%. That's an overwhelming majority. And we're not talking about 80% save a couple bucks. The average savings per client with us is between $3,000 to $15,000 annually. And that's going to be on an ongoing basis. We're going to continue to save them that money. So that's a significant savings. So what about qualifying? Well, any company with a waste expense in excess of about $500 a month is an excellent candidate for this, to try to reduce that expense and get some of the savings that we've got for some of our clients of that $3,000 to $15,000 on average. So moving on to that next expense reduction, what about work comp insurance audit? Well, do you ever get the feeling that your insurance company is keeping your money without you realizing it? Well, guess what? Our experts indicate that over 70% of all companies have been or are currently overcharged for their workers' compensation premiums, despite all the resources that they deploy to try to minimize that overage, right? And so if you're getting that feeling that you're getting overcharged by your company, there's a 70% chance that that is justified. So how do you qualify for our services where you're going to actually see a savings in your workers' comp audit? Well, the good news is that if you have an annual workers' compensation premium of $50,000 or more, you're probably going to qualify for a significant savings, but we're going to actually go in there, we're going to audit your reports, we're going to make sure that your insurance company has got your employees classified right, because that often is screwed up, and often is screwed up in favor of the workers' comp company, and make sure that any money that's been paid to them that should not have been paid is given back to you. And if you have $50,000 or more in annual premium, that's the breaking point where we start seeing some significant savings for the business. And companies that operate in more than one state have an increased probability of recovering a refund and having that refund being even more significant. So if that qualifies at all for you, then this is a good area of opportunity. The next thing we're going to look at is parcel shipping audit. So your shipping costs. I don't know about you, but I thought when I first saw this, But isn't shipping cost a shipping cost? And the answer is, well, not exactly, of course, right? You see, our clients can expect to see up to 3% hard dollar savings in the form of refunds. So more money actually sent to you. Who doesn't like getting a refund check, right? I mean, you feel a little upset that they took the money in the first place, but you're certainly glad to get it back, right? And that's from the carrier directly. So they've been overcharging you, and on average 3% for any business that's shipping anything in the continental U.S. And in addition to that, our clients average an additional 7% savings through just the use of our technology and reporting tools that we make available to optimize your shipping and minimize at the same time the cost that you would incur to send that product, to find ways to ship it at the same time, or the times that you need to be shipped at the minimal cost. So between these two, you can expect to see a 10% savings. The best of all about this is qualifying is really any company that ships packages within the continental U.S. And obviously the more you ship, the more you're going to save. But what about the third and final area of savings? How can I save with my retirement plan? That seems to be an intriguing idea to a lot of people. Well, retirement plans really come down to the common question that people have to ask themselves, which is, do I pay taxes today or tomorrow? That's a question that your accountant or financial advisor will ask you. When do you want to pay taxes? And then make a case for why today or tomorrow would be better to do that. Right? So we've all faced those questions, and we've all made decisions whether we're conscious or not, or whether we want to pay taxes today or tomorrow. Would you like your retirement plan, though, to provide business tax deductions today and grow your money tax deferred tomorrow and take distributions tax-free tomorrow as well, too? What about that option? Was that option offered to you? Probably not in most cases. So what if you could do all three of them? Because you can with our proprietary retirement program that allows you to maximize a business tax deduction today, allows you to grow that money in a tax-deferred vehicle, and to take that money out on the back end tax-free. So we have the ability to eliminate the need to ask the question, do I pay taxes today or tomorrow? Our answer is, don't pay the taxes today or tomorrow, just work with us and we'll show you how. But there's a lot of other financial services we do other than retirement strategies that maximize your tax deductions and tax-free income. And so what are some of those financial services that we offer? We also offer business brokerage services. So if you're in a position where you're looking to sell your business because you're ready to retire and go sit on the beach in Florida, wherever it is that you want to be, we can help you sell that business. Or if you're saying, you know what, I'm not anywhere close to that yet, I actually want to expand my business, I'm looking to buy businesses in my industry to grow faster, we can help with that as well too. We also have franchise development services where if you're saying, you know what, I want to expand my service, but I want to do it through a franchise model as opposed to buying other businesses, we can help you develop that strategy and help you deploy it as well too. And lastly, we can help with corporate loans. So we can restructure loans you currently have at lower interest rates or help you purchase that commercial property so you can own that property to help you with that and help you with that lending and corporate loans to help you save money on that process as well too. So what are some real life examples? I mean, this is all good and fine, but how do we know that this is even worth talking about? So let me give you some more examples to look at so you can get a gauge for whether or not this might be something worth taking a closer look for yourself. So let's look at savings by industry. Now these are, again, not the only industries that we work in, but they're certainly a good wide variety, and to give you an idea of what types of savings you can see. Now on the screen, you can see that the lowest average savings, once again, is at owner dealership at $80,000, right? So that's a significant savings, and that's the lowest one. In fact, most of them round out to be about $250,000 in savings. And bear in mind that these are not just hypotheticals. These are based on clients that we've worked with. Meaning that these clients, once again, had CPAs that identified that they can do better with a partnership with us and provided significant value to the client, to the business owner. So there is a significant amount of savings that you can realize, and a lot of these tax incentives or saving strategies don't necessarily apply to just specific industries. So if you don't see your industry on here, there's a good chance that we would still be able to provide a significant savings to your business. But let's take a look at a real-life example broken down. So if a specific company, now this company we're taking an example from is an auto dealership that our company worked with. And the first area we're going to look at is cost segregation. So we helped them. Their benefit was $413,000 that they received in their cost segregation plan. You can imagine that they were pretty happy not only with us, but with their CPA for making this available to them, because that is a game changer, but it gets even better. So they also did an audit of their merchant. That's $37,000 benefit, not only that they get from past transactions, but now are not paying in future transactions, and that's going to be ongoing and is going to equal any of the tax deductions we're going to show you or benefits that they're going to get from working with us. And again, $37,000 they're going to be getting, they got in that year and will continue to receive via paying lower fees for their credit card processing, and they didn't have to change their provider to do that. We also provided corporate loan refinance to help them save with the course of the loan $4.2 million. That's million. $4.2 million in benefit based on the corporate loan refinancing that we did over the life of the loan. And the last one we're going to take a look at is retirement plan. It was another $3.8 million in benefit to the business owner based on how we restructured their retirement plan to benefit them with a more tax efficient model or plan that went into their own pocket. So $3.8 million in benefit. Now, I don't need to add these up for you to realize this is a significant value to the business owner, and they are extremely ecstatic. Now, I'm not saying that you're going to get the same benefits. They might not be nearly anywhere near as high, but even if they were a quarter of what you're seeing on the page, isn't this worth taking a look at, right? Even if it's just a small fraction of this, knowing that you're not going to have to pay us a fee up front to have us initiate this and realize these savings, that our fee only gets paid when there's an actual savings that's created and is based on that dollar amount as a percentage that's taken as our fee to cover our expenses. Isn't that worth taking a look at? So how much again does this cost, right? I was alluding to that, and our fees for service are very straightforward. And the way we get paid is that when we realize a savings for you, we take a portion of that savings and keep as a fee to cover our expenses. Now our fees will vary from service to service, but in some cases they can be as low as 10 or even 35%. And some of the bigger tax savings that we can provide to you are the smaller percentages. For a more specific breakdown, I encourage you to fill out the contact form that's on your screen, and we can then talk further about that. But it at least gives you an idea that we get paid when you save money. This is not the traditional fee-for-service business where you pay us a fee and then we provide a service. We're on the same side as you. We want to make this tax incentive and these savings as high as humanly possible, and we're willing to go the extra length to do that because we want you to get the maximum benefit, and then we win when you win. But only when you win. If you don't win, that we don't win. And if we go through this analysis and we don't identify by some miracle that there's some massive savings, and you say, hey, this isn't worth, the juice isn't worth the squeeze, or there's no savings, no harm, no foul, you don't owe us anything for the work that we did, we simply shake hands and say, hey, if you ever want to look again, we're happy to do this. So no obligation out of your end to do anything with us up to the point where we identify your exact tax savings, or in savings in general, and then from there, once we initiate that process, then we are going to take only a small portion of those savings to cover our expenses. And again, remember, part of that savings will go towards, our portion of our fees will go towards supporting, in this case, Stellar Impact Foundation. So where do we go from here? If after hearing all this, saying, you know what, I'm interested, you got my attention, how we get started is very simple. I alluded to just a second ago, there's a form, an offer on your screen to click on, and when you click on that, it's going to take you to a form that's going to allow you to answer some questions and fill out a form to give us a better idea of your business and what is it you're looking to do so we can be better prepared. And then we're going to reach out, myself or someone on my team is going to reach out to you, and in 15 minutes or less, we can identify what your estimated savings is going to be. I encourage everyone on this call to at least go that far. Find out what your estimated savings is going to be, because you know what? If you find out that it's X dollar amount of, say, $250,000, and you say, you know what, my account's going to be getting me maybe $100,000 that they represented in reduced taxes, then you know that there's money on the table. So get that far. And if you find out that it's a really small amount, it's maybe not a good fit, but at least you know that. And it takes you literally, myself or one of my team members can do this inside of 15 minutes just talking over the phone. with some very simple questions to ask that gives at least a good idea. And then from there, if that number seems appealing to you and want to validate that number, then we'll go through the process of having you talk with one of our specialists, and we're going to collect some information to be able to validate that number to give you a more exact number that, based on everything that your accounting firm has done, based on everything your current situation, the numbers you provided to us, this is what your savings are going to be. And then at that point, you can decide whether you want us to initiate. We say, thanks for the information, but I'm going to pass. Either way is fine with us. But we want to get to that point. So that's really where we can go from here. If this is value to you, then simply fill out one of the forms, click on the offer, and then answer the questions to the best of your knowledge and submit that to us so we have a better idea of what your current situation is. And then myself or someone on my team will follow up and go through a less than 15-minute process to identify your estimated savings, and then you can decide where you want to go from there in pursuing actually realizing that savings for your business. And so again, just a quick word on the sponsorship. As I mentioned before, any of these savings that are generated for any clients that watching this live webinar that lead to us executing those plans that will incur obviously a portion of those savings coming to a Stryde organization as a fee, a portion of those fees will go to the actual sponsor, which in this case was Stellar Impact Foundation. And if you're sitting there thinking, you know what, I have a nonprofit organization that I'm a part of or support and would love for them to have the ability to do something like this as well too, please make a note of that on the form, because I would love to talk to that nonprofit organization about sponsoring one of these live webinars. And the great news is this, and I encourage you to share this with a nonprofit you might be affiliated with. Stellar Impact has paid me zero in fees. They don't pay me anything. They don't have to do any work to set these up. I do this as part of a strategy, a unique strategy I put together for nonprofits specifically, so they can generate a significant amount of traffic to these opportunities, as you can see from how many people have been on this live webinar, and to do it in a way where we all win, where Stellar Impact Foundation gets a benefit from the portion of these savings, as well as the business owner that's getting served by this, as well as myself. So the good news is that we're on sponsorship. If you know of a nonprofit, I'd be more than happy to discuss that with you, and more than happy to speak with them as well too. So that being said, my friend, that's all I've got. If you haven't taken the opportunity already to do so, I encourage you to click on that offer, fill out the form. Myself or someone on my team will follow up with you, and we can certainly get to a point within about 15 minutes of whether or not you're going to have a significant savings, and then we can have a good conversation at that point that's relevant to your current situation. So that's it, folks. That's all I've got for you today. Hopefully this was helpful and insightful and eye-opening for you, and I look forward to the opportunity to continue to talk with you and see if we can save you a significant amount of money, and at the same time help support a wonderful nonprofit, in this case Stellar Impact Foundation, for making it possible for me to have this presentation with you. Thank you so much, my friend, and have a great day.